Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first scenario where we are looking for a bigger three-wave corrective structure in a WXY, after which we expect continuation to the upside. Inside this wave X, we are then looking for an expanding flat, a 3-wave A, 3-wave B, hitting the common target area for a wave B, which is the 1.236 to the 1.38, taken from the low to the high of A, and then a 5-wave impulsive C to the upside, where we want to see the high of this wave A taken at 67k. We do have some resistance towards the upside. First of all, this blue box here between 63.8k and 64k. Then we have 65.2 to 65.8, and then the first resistance area above the high of A is 68.2k to 69.2k. After this wave X, we are then looking for a wave Y to the downside, most commonly a zigzag structure, sometimes a flat structure, and rarely a triangle. As long as price is not taking the high of wave A, the invalidation for this scenario is the low here at B at 56.5k. If we want to finish that wave C, we are looking for an impulsive structure on the lower time frame. So on the 50-minute time frame, we have our wave 1, 2, potentially 3 finish, looking for a 4 and a 5. Now that does lead to a little bit of a problem because the target being 67k is not yet inside. We're only at 63k, and most commonly your wave 3 is the power move, right? That is where you want to make the distance and not your wave 5. That is uncommon, so it does impact some of the probabilities for this particular scenario. But here we then have our wave 1 being a leading contracting diagonal in a wave 1, 2, 3, specifically this high here, 4, and then a wave 5, where all of the waves are 3-wave structures, ABC in 1, 2, ABC in 3, 4, and then an ABC in 5, finishing wave 1, 3-wave corrective structure in a wave 2, and then we have that impulsive move to the upside in a wave 3. Now wave 3 is longer than wave 1, which is the minimum requirement, that wave 3 can't be the shortest wave between a wave 1, 3 and a wave 5, and you can see it past the 1-to-1 trend-based fib extension, taken from the low to the high of 1 to the low of this wave 2. Now this wave 3 can already be finished, because if we look at this move to the upside here, we can count a 1, 2, 3, 4, 5 wave structure, wave 3 finishing somewhere here, currently working on a range which is typical for the weekend as well, in a wave 4. The common target area for your wave 4 is the white box, the 0.236 to the 0.5, taken from the low to the high of this wave 3, giving you a target area between 62.3k and 61.1k. And inside this area, your best area of support would be the daily naked point of control here at 61,750. The main area of resistance is the monthly naked point of control at 64k, and a wave 4 can be any corrective structure. It can be a zigzag, can be a triangle, can be a more complex WXY, and of course it can also be a flat structure, but by all means, after wave 4, we are looking for a continuation to the upside in a wave 5. Now, because this impulse on the lower time frames is relatively short at the moment, as in the 4-hour scenario shown, we're looking for a wave C to end above wave A, but if wave 3, 1, 2, 3 is already finished and we're looking for a wave 4 and 5, an extended wave 5 is uncommon, so it does open the door for the possibility of an ended structure here. So we have a finished WXY, and this move to the upside is then a wave 1. You expect a wave 2 to the downside, and then a continuation to the upside in a wave 3. Here we then have again the same W, but this time wave X is a lot shorter. We have a zigzag family structure inside this wave X, and wave X only hit the 0.1 fib time taken from the start to the end of W, which is extremely short, as most commonly waves are at least related by the 382 fib time. So the 0.1 is very short, which does impact the probabilities. And also if we look at this wave Y to the downside, which is then a zigzag, that's absolutely valid, but this wave Y here hit the 0.236 fib time taken from the start to the end of W to the high of X, comparing W with wave Y, which is also very short for a wave Y, but at least a little bit better. And wave Y compared to wave X is twice the length of wave X. So a fib time taken from the low to the high of X, wave Y was twice the length of X, which is absolutely fine. Now the common target area with regards to price for wave Y has been hit. It is a trend-based fib extension from the high to the low here, the end of wave W, to the high of this wave X, common target area is the 618 to the 1.236, 58.5k to 49.6k, and inside this area we would then be looking for a bounce. Now, as wave Y has to be a three-wave structure, and with a flat in W, wave Y over here is a nice zigzag, which is absolutely fine. Preferably your low is in and you look for a move towards the upside. Now, in this scenario, you don't necessarily have to take the high of this wave over here, of this structure, of this wave X at 67k. You can finish a 1, 2, 3, 4, 5 wave structure, not take the high, retrace, this is then your wave 1, retrace in a wave 2 and look for continuation to the upside. If price is not going to take the high with wave 5, it does increase the probabilities for this particular scenario, because inside a wave X, a running flat being a 3 wave A, 3 wave B and a 5 wave C, where wave C does not take the high of A, is the least common flat pattern. The most common flat is an ABC expanding flat. The second most common flat structure is a regular flat, which is more of a ranging structure, but wave C should still take the high of A, and the least common rarest flat pattern is a running flat, wave C not taking the high of A, which therefore is never preferred unless all of the other stuff fails. So if we finish an impulse here to the upside, not taking the high of this structure here at 67k, the probabilities go up for this scenario, right? Now, also, we still have a bearish scenario where we take the low at least one more time. Here we have a wave A, wave B, and then we're looking for an ending a diagonal structure in a wave C. Wave C is not allowed to be twice the length of A plus B, so a fib time taken from the start of wave A to the end of wave B, and double clicking here will give you this vertical line on the chart, the 2 fib time, sitting at the 29th of May. The moment wave C would end after this 2 fib time, it significantly reduces the probabilities for this particular scenario. Inside this wave C, we are then looking for a 5-wave structure. Wave 1, 2, 3, 4, 5 should always be a 3-wave structure. So ABC, 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 and the final 3-wave structure, or double or triple zigzags, that's also allowed. But wave 4 is not allowed to go above this wave 2 here at 67.2k. That is an invalidation for this scenario, and we then want to see a wave 5 towards the downside in a 3-wave structure. Currently, this wave 4 retraced to the golden pocket taken from the high of 2 to the low of this wave 3, which is still a common target area for a wave 4 in a diagonal structure, but you don't really want to see it move higher to the 0.786. And the 0.786 is just a bit higher here at 65.1k. So it's no problem for price to hit that monthly naked point of control over here at 64k, right? But you don't really want to see price passing this resistance box, moving higher to this one, as that would reduce the probabilities for this particular scenario. Inside the diagonal wave 4, aiming for a wave 5 to the downside, we then want to count a 3-wave structure to the upside in 4, which naturally then is a zigzag. So we have our wave 1, 2, 3, 4, 5 in a wave A. Here we have a wave B. Then we're looking for a wave C to the upside. Now, your most common target area for your wave C is the 1 to the 1.618 over here, which is 62.4k to 64.5k, includes this resistance area with the monthly naked point of control as well. The only thing we do have to think about is the high over here, because if we look for a wave C, then preferably when counting this move to the upside, your wave C is already finished, because if this is the low of your B, you can count a wave 1, 2, 3, 4, 5 wave structure very, very nicely indeed. But then preferably this is the end of your C and you aim for a move to the downside. So it has to be said that if you take the high here one more time, it does reduce the probabilities for this to be a 3-wave structure, and it increases probabilities for the bullish 1, 2, 3, 4, 5 wave structure. Looking at these CVD divergences, it all started with bullish CVD divergences over here, getting this push towards the upside. And now more locally, we have again bullish CVD divergences. Now this one and this one already played out, higher low on price, lower low on the CVD, but with this drop to the downside, once again bullish CVD divergences between this low and the higher low, where the invalidation would be for price to take this low before the high, because the target for this divergence is price taking the high. So it's no problem for price to move towards the downside still, maybe even hitting the daily naked point of control, and then move towards the upside because the invalidation is this low. We do have some bearish CVD divergences locally here, lower high on price, higher high on the CVD. Price now now starts to range, so let's see what it wants to do. The most important support resistance is for me the monthly naked point of control above and the daily naked point of control below. So if we then look at the probabilities of the different scenarios, then on the 15-minute time frame, the probabilities at the moment are a bit higher for an impulsive structure to the upside, because as explained, if this is a wave A, B, C, then preferably your high is already in, but it doesn't look too bearish locally at the moment. Of course, we continue to observe this range, and also the current high over here didn't really hit any important resistance for me. I would like to see it hit that monthly naked point of control, but if price takes this high once again, it does increase some probabilities for this to be an impulsive structure instead of a wave ABC. Looking, however, more locally for a move to the downside in a wave 4, so a corrective structure either in a flat to hit the monthly naked point of control and then the daily naked point of control, maybe continuation after, potentially triangle, zigzags. We have to wait and see what price wants to give us, but waiting for a wave of 4 over here before another move up in wave of 5. Either wave 5 hitting the monthly naked point of control or potentially a flat could be quite interesting, because we got quite close, but we didn't hit it, so it would be good to actually touch the monthly naked point of control, and the daily naked point of control is support here. Now, if the 0.618 is hit at 60.5k over here, it reduces probabilities for an impulse 1, 2, 3, 4, 5 wave structure, right? So this is pretty much your invalidation at the moment, 60.5k. And because of the 15-minute probabilities, the probabilities on the 4-hour are higher for the WXY scenarios, where either you have your wave W, flatten X, and a wave Y, or potentially even a finished WXY, which depends on the structure to the upside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.